if we were to go back in time, even just 25 years ago or even more, and tell them what's going on now, they'd be like, that's just not possible. Good morning, good evening, good afternoon, wherever you are, whenever you are. Thank you for watching my videos. My name is DaVinci Jeremy. I'm in the pipe 5x5 here in Dubai. Hope you're doing well. Oh boy, wow. You know, the economics of today is just absolutely insane. We have crazy things that are going on, and they tried to explain it away, and every explanation is just wrong, just absolutely incredibly wrong. And we're going to be talking about some of those things in today's episode, also going over some trades and stuff that we can probably do on different exchanges such as bybit.davincij15.com. right here, links are in the description below. And yeah, let's get on with today's show, which is historic yield curve inversion reaches 656 days, echoing a pre-stock market crash patterns. Yeah, okay. Based on the latest data, the yield curve of the U.S. Treasuries, which charts the yields of the 2-year and 10-year bonds, has remained inverted for a total of 656 days. This latest inversion joins previous records in the 1929, 74, and 2008, all of which preceded substantial declines in the stock market. Recent market observers have been actively discussing this trend, speculating about the future implications for the U.S. economy. Wow. This is crazy. You know, this is not just this particular data where we're seeing this inversion here that's going like, what the hell, right? Since, you know, the mid to 2022 till now. I mean, it is also, right, the negative interest rates that have been going on even up to today, which is finally ending. Of course, in Japan is the last place where you can get negative interest rates, right? And for those who don't know what the yield curve is or what negative interest rates is, it's just that, you know, you will get a better rate, right, on the 2-year than you would on the 10-year. So that's what the yield curve is, which doesn't make any sense because you should be getting a better rate on the longer term rates than the shorter term. But here on this one as well, you could borrow money and get paid to do so. If someone were to go back and tell people that that's going on, they'd be like, yeah, that's not possible. Yet we've gone through this for more than 10 years, right? Since actually 2010, it started. Sometime in 2010, this started, like 2011, 2010, and it just went on for many, many years. Like 2016 is when it started turning around for most countries, but it still continued to this day. What? Doesn't make no sense at all. Anyways, moving on. New stablecoin bill faces criticism for stifling innovation and breaching First Amendment. Wow. Okay. So what's this all about? Okay, basically a new bill co-sponsored by Senator Cynthia Lummis and Christina Gillibrand aimed at regulating stablecoins has drawn criticism for potentially stifling innovation and breaching First Amendment rights. The bill includes provisions that ban all algorithmic payment stablecoins, which could have significant implications for software developers and the broad tech community. Okay, basically what they're saying is that MakerDAO, and, you know, they're saying that this is supposed to stop, you know, other cryptocurrencies that have failed, right? Algorithmic coins that have failed, like Terra, right? Luna. But this will not pass, right? Doing so, it would not be just bad policy, but unconstitutional as well. Even if it passed, right, it will not survive Supreme Court ruling. Here's why. Because they tried this nonsense with encryption, and people just put it in a song, and songs are protected speech, so that's that. So the same rules apply, right? I mean, you just put it into, you know, some sort of song or whatever, and that would be that, right? Banning people from publishing code or algorithms is clear prior restraint on protected speech and is unconstitutional unless the government can show a compelling interest and narrow tailoring, meaning that they have to make it really, really tight, this law, because it is not going to work. I was supposed to talk about the fact that what does this mean, right? If this is historic and we're going to have a crash soon, right? I forgot to mention, right? Since the crash in the market is looming, right? Yes, it's coming. What will it mean for Bitcoin? Will Bitcoin go down? Yes. But in the title, you said to buy. Yeah, you should buy because it will recover. Now, if you don't believe that, this is what happened, right? In 2020, Bitcoin collapsed, right? And then came back up in 2 months. Now, if you think you can catch the bottom, if that were to happen this time around, unlikely. If you were living through this, you would probably would have panicked out halfway through. There's just no chance, right? And besides, look, if you bought like right here, $8,500 Bitcoin, and you were like, damn, it went down like all the way to got cut in half, all my money, right? But quickly recovered back to 8 in 2 months. There you go. Now you'd be wishing for that $8,500 Bitcoin right now, right? Don't you? I know you are. Now the same rules apply over here in Bitcoin. If you buy here and we get cut 50%, a 50% haircut, which is like, 32,000 or something like that, it's not going to last, right? We're going to be back up within a few months. And I don't think you're going to have the stones to buy down there. I really don't. If you can't buy here, you ain't buying down there. So if you want, you can put half of your money in and then the other half later. Okay, with that said, let's take a look at the price action, right? We can see that Bitcoin has not been kind to short sellers at all. Yes, although it was correct to probably short this thing once it broke the first low here, and it failed, and then you were like, oh, darn, stopped out, and then did it again to you right here. Wow. I mean, if this is just like, somebody was like actually making money off of this and doing this on purpose. This was just nasty. This is just nasty because, yeah, as a trader, you probably should have shorted this once it broke down. And yeah, even if you caught the top here, you're still like, wait a second here, this just came back at you. So yeah, short sellers, no matter where they started, right? Even though technically this is not good, this is what Bitcoin's doing to you, man. It's been a horrific ride. That's just the way it is. You have to accept it. So with that said, we're going to see Bitcoin come back up here. And even though we can say, okay, well, yeah, it's broke down, it's negative, we have to make sure that if we were to, the possibility of breaking out is also a possibility, but not probable at this point in juncture in the time. So somewhere up here is where we have to look for a point to sell this and fade this rally. No guarantees, of course, but that's where we're looking for Bitcoin. We're gonna probably head up to the 61.8 most likely, and then fail. Usually that's what I see what happens on a daily chart when Bitcoin is like chopping around. Now, we are in a bullish sense, so you have to be careful, right? This could turn right against you, but everything says, hey, yeah, we're rolling lower. Okay. Once again, if you're interested in trade this, you can trade this at bybit.davincij15.com, 2bit.davincij15.com. Links are in the description below. Okay, let's take a look at the Ethereum. Ethereum at least gives us a little bit more clearer picture. You can see that although we broke a low way down here at $2,700, we didn't actually try to break that low again, right? So it was a little bit more, kinder to the short sellers because they weren't set up to take a loss here. So you can see that you had to go break down in order for you to jump into a heavier short. But yeah, even then, right, you could have like shorted this and up here, maybe got this wick here, and then you're still in the green for the short. But we're at the 13 EMA on the daily here. We could break higher, and yeah, we're just battling that 13 EMA. If we hold the 13 EMA, that would be a positive sign for the short sellers. We have to hold the 3,200 for short sellers to continue. But if that doesn't happen, the short sellers have to back off and basically wait for another entry at a higher point, probably at the 78.6, which is at the $3,500 level, which, if we break above the 3,700, that would be a new bull market. So that would be a clear indication for sure of a bull market, even though it did that here and it indicated a bull market and then immediately wiped us out. So this would definitely now give us an indication of a new bull market, of a close above here, above the $3,700 mark. So that's the indication. All right. So with that said, thank you for watching. I hope you learned something today. I hope you enjoyed today's episode. I'm going to be doing some question and answers at the end of the show. I do this live for my audience in my private group at DaVinciJ15.com. If you want to watch this live and ask me questions directly, you can do so by signing up at DaVinciJ15.com. All right. Thanks for watching, and we'll see you guys next time. Cheers.